Hello. The company being analyzed today is Baheti Recycling Industries Limited. This is a company whose stock price has seen a 86% CAGR growth in the last 3 years, 28% growth in the last year alone. This is a 578 crore market cap, so small cap company with a PE of 28.6 times, trading at 558 rupees right now, with a book value per share or net asset value per share of 66 rupees. Its revenue has seen massive growth, growing at a 42% CAGR from 127 crores in fiscal year 21 to 524 crores in fiscal year 25. EBITDA has seen even better growth, 76% CAGR from just 4.2 crores in fiscal year 21 to 40.6 crores in fiscal year 25. And profit after tax has seen a phenomenal 148% CAGR from 4.8 million rupees or 48 lakh rupees to 18 crores in fiscal year 25. So massive, massive growth numbers. Profit growing faster than the revenue, so more profitable. Return on equity has seen a nice rise to 30.46% in fiscal year 25. However, cash flows are actually pretty awful. Look at the cash from operating activity minus 23 crores in fiscal year 25 and minus 11 in fiscal year 24. Awful cash flow numbers, to be honest, but great growth. Now, what does the company actually do? So, incorporated in 1994, they're an aluminium recycling company. Okay, they process aluminium-based metal scrap. So, aluminium metal scrap, and they manufacture aluminium alloys from them. Their current production capacity 29,160 metric tons per annum. They have 150 worldwide customers. Worldwide, global company. The company's products include aluminium alloy ingots. Ingots is a particular shape, with a kind of a cylindrical shape. Aluminium notch bars, aluminium cubes, again aluminium ingots. Sorry, the first one was aluminium alloy ingots. So aluminium mixed with some other metals into an ingot. And then comes aluminium shots. So these are all of its products. Here are the manufacturing capacity of the company, 29,160 tons per annum. Okay, 64% capacity utilization. Key thing, okay, 64% capacity utilization. So with its current capacity, it can still make more products by increasing capacity utilization. Okay, 8 furnaces of 300 kgs each. So furnaces are its machinery. Okay, 7 of them are these electrical furnaces, and it's got this one TRF, tilting rotatory furnace. This is a kind of a new technology, and they're adding one more pair of TRF in order to do what? Replace the traditional furnaces. So the TRF furnace, the TRF is a newer kind of machinery. Okay, then Vision 2028, we are confidently positioned to reach a revenue milestone of 1,200 crores by fiscal year 2028. Hold up. So compared to revenue in fiscal year 25 of 524 crores, okay, we come back to this vision of 1,200 crores by fiscal year 2028 alone, more than double in just 3 fiscal years. Okay, in order to achieve this, they're going to drive the product portfolio. So, of course, bringing in new products. They'll be scaling up cash flows. Finally, they're thinking of or they're planning to have more cash flows, driving a new leg of growth to the strategic deployment of new machinery. So, better technology, achieving exponential business growth by aggressively expanding our market share within the automotive sector. Okay, increasing market share in the automotive sector, and of course, focusing on consistent inflow of orders. So, yeah, business as usual. Then the operational performance. So, these are the capacities, their production capacities over the last few years. You can see 12,000 metric tons in fiscal year 21 and now 29,160 metric tons fiscal year 25, expanding to 38,000 metric tons by fiscal year 27. So in order to achieve that 1,200 crore revenue milestone, they will increase the total production capacity. And you can see what they're actually producing. This is the total production, 18,160 metric tons in fiscal year 25. You can see the aluminium alloy ingots. They're making 11,576 and 7,034 tons of aluminium diox. From what I understand, diox means aluminium deoxidizers. This is aluminum products used to, I believe, deoxidize steel. Okay, they act as a deoxidizer. So you can see alloy ingots is a very important, like a very, very important product. And you can see the total capacity utilization, 92% fiscal year 22, 63% fiscal year 25. And of course, they're expecting higher capacity utilization even on the increased capacity. So again, in order to drive the growth, the revenue to 1200 crores, they will need to increase the production capacity also. Then, industrial applications. You can pause and read, but a trend has been noticed here that as the years have gone by, their products, they're expanding their products, they're becoming more and more useful. Okay, more and more use cases are being actually added. So, new use case, they're looking at wire rods. Let's read that. The company has strategized and is well positioned to set up a capacity for aluminium wire rods in fiscal year 27. Okay, so new product, aluminum wire rods in fiscal year 27. So keep adding new products and the applications for the products, of course, is also increasing. Some of the marquee clients include, who do we have? We have LT, we have Philips, we have Sigma, M- Motherson. Okay, we got quite a few of these marquee clients, but you can see chemical materials, okay, energy clients, clients in manufacturing, clients in steel, clients in the automotive sector. So a wide variety of clients are there. Okay, there's a diversity in the clients. Then industry tailwinds. They have got some general industry tailwinds. One, the government mandate, that is the rate of recycled aluminium content in the total aluminium content has been increased to around how much? 10% is an estimate for like fiscal year 2030 and 5% by fiscal year 29. So these are all estimates, but they're expecting that the aluminium mandate, okay, the government mandate for percentage of recycled aluminium to be used is increasing or is going to be increased. Then the general Indian metal scrap recycling industry is growing by 6.32% CAGR over the many years. So the industry itself is growing. And of course, the Indian aluminium market itself is also growing. Okay, 7.22% CAGR expected to grow to $92.24 billion by fiscal year 2050. So there are some natural tailwinds coming. So that's a good thing. Then the company has got a high entry to barrier. Okay, high entry to barrier. So one, they've got decades old partnerships with the customers. Okay, it's kind of tough to actually get the machinery. Okay, it's working capital intensive. Okay, the metal scrap recycling industry is working capital intensive. You need to, of course, get regulatory compliance. A lot of massive capex is needed. Okay, and there are a bunch of high barriers to entry for new players. So they're arguing that it's not that easy. It's not that easy for new players to get in, and that will mean a lower level of competition. Then finally, this is a good one. They have got an 8x asset turnover model. So they've got a high asset turnover, which is good. Which is good. Okay. So this one pair of, remember, TRF machinery that they're introducing, okay, it's expected to be live by H2 of fiscal year 26. The entire capex for this will be 25 crores, but is expected to generate 200 crores of annual revenue. It means in order to produce a lot of revenue, they don't need a lot of capex. That is making of new assets and whatever. So that is last thing we wanted to show. The company is aiming for some really, really big growth. Let us see how Baheti Recycling Industries actually does in the future.